All right, hello everyone, and welcome back to the Daily Show again. So let's get started. Right, so first thing first for the daily chart for the S&P 500, what you can see is actually in terms of the line chart, after making a little bit of a higher high over here, it actually forms a little bit. And more importantly, if you look at the price action, you can see there was a clean break above, but then after that, it was a break above and then a clean rejection downwards, and it closes towards the bottom half of it. So this candle is what can be called as a bearish engulfing candlestick. And in addition to that, it's also rather bearish in the sense that it attempted to break this high, which it did. You can see here, this is 3233, and this is 3235. So this is technically a valid false break setup. It was a rather clean move to a possible double top formation. So by this formation itself, I would say in the short to mid-term, it could be a little bit bearish. So let's see how it goes. If today price actually opened below it, then I'll lean towards the bearish side in terms of the short-term wise to possibly retest over here in terms of support. So if it does form a higher support, then we could still be ultimately going to the upward trend. So yeah, this is how I see it to be. Okay, so but in terms of market structure, what I see here is a high, a higher high, a low, and a higher low. So this candle, even though it is close, but it could be a form of lower low, or it could be even considered a higher high. So that is yet to be determined. So in the meantime, what I am sure for certain is this is definitely higher high and higher low. So bullish market structure still remains, and daily trend line remains bullish. Price is much above that. Strength of the trend is actually strong. No, it's actually normal right now. Yeah, because if you look over here, yep, it's actually normal, not strong. Because the 50, 150, and 200 simple moving average are not aligned correctly as seen over the data over here. Okay, so that's the update for S&P 500. Let's take a little look at Nasdaq. Okay, so for Nasdaq, it is a much more decent retracement by looking at price action wise. Similarly, you get a very strong bearish engulfing candlestick, but that means it's going to fall really hard. That's hard to say for certain. So you have to see how it reacts with the price when it reaches this 20 exponential moving average, and how it reacts to it will give a clearer idea of whether is it going to continue upwards. Like for example, this case it touches, bounces up nicely, touches, bounces up nicely, touches, bounces up nicely. So for now, as long as you have entered this trade, I will continue to trail it until it closes significantly with a clear break below it, then I'll look to close the remainder 50% of the trade. Otherwise, I'll still continue to trail it. But in terms of market structure wise, it's still making higher highs and higher low. So this is not yet confirmed. So this also, even if we were to bounce back higher, then this will form a higher high, higher low, I mean. So yeah, so technically you get a bullish market structure, bullish market trend, and a strong trend as well. Right, and next up, we have ASHR. ASHR wise is still looking very strong. It could possibly be breaking out even higher. But if you look at this, this is somewhat, even though it could be considered like an ascending triangle, you can also look at a bearish ascending wedge. Because ascending triangle typically is more of a rather flat, but this one is actually reinforces trying to push it higher and higher, so it could actually break up and then fall back down. So let's see how it goes. So instead, it's looking like it's a retraction because it forms a higher high, but it actually closes below. So I would lean that tentatively, I would lean towards the bearish momentum in terms of the short-term momentum, but let's see how it goes. Otherwise, bullish market structure remains with higher high, higher low, and looking strong with this 50, 150, and 200. So if retracement forms to around $30 to $32 is where I'll look to add my investment position as well. All right, let's move over to KWEB. So for KWEB, similarly like the Nasdaq, it seems to be mirroring one another quite closely right now. After forming all-time high, it's retracing a little bit. And this again, after forming this standalone like a hanging man candlestick, which is like a red bearish hammer candlestick, since it forms at the top after a get up. And then now you have a bearish engulfing candlestick. It does look in terms of short-term why going to have some decent retracement. So similarly, see how it reacts with this 20 exponential moving average. So if it does form a bullish candle, like for example here, that's where you can consider to enter long again. But otherwise, yep, I will stick to just a wait and see approach. So if you're looking at the market structure wise, it's clearly still making higher highs and higher low. All right, and now take a look at Bitcoin then. Sorry. So anyway, for the look at Bitcoin, what you see over here on the daily chart, okay, so you ignore this one, so actually closes a little bit on the lower range. So like what I mentioned, this is where volatility is actually shrinking. So now that he has broken downwards, I do lean towards the bearish momentum, especially when it's firstly below this 50 simple moving average. He was rejected once, and as I previously mentioned, he was actually supported over here. I tried to break lower, but it didn't. It breaks up. And then now I try to break higher. It didn't. It's breaking down again. So tentatively, I do lean towards the short term, but there could be some sort of support coming at this 9,100 mark. So let's see how price react to that. So if you're looking at the price action trader, you have traded over here. So clean break along here on the 4-hour chart would be a potential trade setup. But before I go into it, let's see the market structure. You're still getting a high, a higher high, a low, and a lower low. So yes, closes below that. So if you have a lower low, what you get is actually a neutral market structure, strong in terms of the trend and bullish in terms of the trend because price is still above, but the strength is actually now normal. So it does show that there could be short-term retracement because from your strong trend actually transited to a normal trend because of this 50 crossing down underneath. So even yesterday it should have been normal. Yeah. Yeah. So on the 10 is where it has actually crossed. So even on here, yeah, it should have been normal. See over here, it was normal. So that was my mistake. But otherwise, in terms of strength of the trend, it's definitely normal. Let's look at the 4-hour chart. Okay, on the 4-hour chart, what you see over here is basically some sort of consolidation. This could be a potential bear flag, which looks like it, because he has broken down nicely along this 1, 2, and 3. This is a support region. So it could relatively bounce back right up here before it retraces further down. So that's how I see the price action is going to be like, especially when it's been clearly rejected by the 200 simple moving average on the 4-hour chart. So market structure wise, you get a high, a lower high, a low, and a lower low over here. So this is 9233, this is 9231. So yep, technically you still get a higher high over here, and this is a lower low. So you get a bearish market structure, bearish trend, and the strength of the trend is actually normal. With this, so when 50 and 150 goes above, there's where you transit to a strong bearish market structure on the 4-hour chart. All right. So in terms of potential setup, like what I mentioned, if you look over here, I did say that you could enter a pullback or false breakout. So enter a short if there was a false breakout above the 2-hour simple moving average. So if you look at this actually occurred in terms of price action wise. You get a clean break above and then here. So this is where you have entered your trade if you're looking for price action trading. So for me, because I was already in this trade based on a different setup, I wasn't looking to price action trade for this. And then you could set yourself with 1 ATR stop loss. You should be roughly around here. And then you can target somewhere along here. This will be your first target. And then you could leave the remainder 50% to trail the stop loss as well. So of course you could be a bit more aggressive, maybe trading somewhere along here, so that's fine as well. But either way, this will definitely be your first target. And you will leave the remainder to trail. So yep, there you have it. So you should have enter false breakout. So like I said, the target of 8.9 to 9K is still not reaching there, but your first target should be around 9.1K. Okay. So yep, that's it. That's the update for today. Otherwise, I'll see you guys tomorrow. Okay, everyone. Bye-bye.